And here's the magic number you need to know, 0.55.
Right now, the stock market is basically telling two completely different stories at the exact same time. On the one hand, yeah, prices are pushing higher, looks great. But if you look just beneath the surface, there are some pretty serious warning signs flashing. So, what is really going on?
And that brings us to the big question, the one we're going to tackle in this explainer. Are we looking at the setup for a massive rally, or is the market laying a trap for a pretty sharp fall? We're going to break down both sides of this using some really fascinating data.
All right, first up, let's look at the case for being cautious. There are a couple of key indicators out there that are suggesting we could be in for a bumpy ride, at least for the next few weeks. And this isn't about feelings or opinions, this is about tracking what traders are actually doing with their cash.
So the first clue comes from something called the equity put/call ratio. Now, in simple terms, this is just a way to measure how the crowd is feeling. When tons of people are buying call options, betting the market's going to go up, this ratio gets really, really low. And what's interesting is that historically, when the crowd gets that optimistic, it often means a market top is right around the corner.
And here's the magic number you need to know, 0.55. Recently, the 5-day average for this ratio actually dropped below that level. That is a classic textbook sign that everyday retail traders are just piling into bullish bets, creating this vibe of extreme optimism that, believe it or not, often comes right before a downturn.